Hello everyone. Hello everyone and hello myself. It's been a little while. What have I been doing? Well, posting on Twitter mostly, and trying to trade natural gas. The last video I made on natural gas was in April, I think. And let's start with the big picture of natural gas. And the big picture is it's looking kind of bad. Unless it's about staging a sort of miraculous reversal, at this level here, at the 2000 level, the $2 level. I've seen a lot of people calling this 1, 2, 3, 4, 5, and then this is 1, 2. Now, I myself am not sure about this. And I'll show you why. I've had tremendous success in demo shorting. I'm with IG, and been more than a week ago, I reactivated my demo trading account because I'd just, my stupid trading in silver and natural gas to an extent. I'd thrown my usual couple of £100 for my paycheck in and just shat out again. Like a fucking idiot. That's through over leveraging. Because the frustrating thing is now, I know I can trade. I know my analysis is often good. I know I can do it, but it's just the impatience. I keep trying to make it too fast. Even though that's what's stopping me from doing it is the fact that I know I can, if that makes any sense. I've reached that point. And the reason I know I've reached that point is I reopened my demo account a few weeks ago. 5.5 demo pounds, and I'm already at 10,300. And not with any crazy risk, no risk of ruin, always using stops, all within the kind of regular risk parameters you'd expect in terms of 1% risk, 2% risk, 3% risk, whatever. Never more than on a particularly juicy position. More than that. And even hedging. If price was in a bit of a tight spot, it had moved, it looked like it was consolidating. I was able to get some shorts to a good level. I would still be going, 2/3, 3/4 short, 1/3 to 1/4 long as a hedge. As a partial hedge. And I felt like the magic was in my fingertips. I kept just getting it right. It helped that the markets were actually moving the last few weeks. And I called the head and shoulders in semiconductors at the start of July. I said we're going down, and lo and behold, we have done. There were people who were do this for a living who were only calling it, a few days ago. I was well ahead of the curve. I was right. So I can do it, and I think even if I only started with an account with, say, 5,000 in, I think very quickly I could get myself to a point where I could live off it, or earn a living, or, just keep doubling it, with difficulties along the way, and rough patches along the way, and drawdowns along the way. The other aspect is participation. I'm on holiday right now. It's my holidays, so I'm actually able to be home and participate in the markets rather than glancing at my phone at fucking work and desperately trying to throw positions on, and mentally and emotionally as well. You're at work, you're thinking, Christ, well, if I could just get a few good trades on, the sooner I can leave this place. Of course, that's not how it works. It just makes things worse, and you trade more erratically, less discipline. But you can't, if you work all day, you miss the markets. I mean, what are you supposed to do? I can't participate because I'm at work. So I take shitty trades on my phone because I'm at work. Because the alternative is just not participating. Or it means having 10 times the level of patience I think I've actually got. So anyway, I've been shorting natural gas in demo. This has been a fantastic move down. You see again, a lot of people say 1, 2, 3, 4, 5. This is 1, 2. And never say never. Like if we get below, what's this level here? 2000. Anything from 2000 down into sort of 1700. It could be a wave 1C. It could. It could. But also not necessarily. 1, 2, 3, 4, 5. Could be. On the daily, we see we've got 1, 2, 3, 4, then 5 coming down. Again, I would have a target of around 1800. And anywhere, well, from this what's that? Quarterly fib retracement. I mean, really now we're under this low. This is the thing. Now we're under this low. You might be expecting it to bounce at any point or reverse at any point. So it could just come underneath and nick it. It could come down to 1970. It could come down to 1800. It could die a horrible death and come all the way down to, well, this would be 100% extension. This would be maybe a bit, no, that's the quarterly retracement. You know, it could die an absolute death and come all the way down to 1300, 1200, 1100. It really could. This could be, you know, not quite like when oil went negative, but it could be very bad, is what I'm trying to say. So on the daily, oops. Let's make that our new channel. Again, we've reset some of our momentum. We've put in a negative reversal, and I think we're going down again. And again, you can see this is the big sort of weekly channel here. So we could easily be coming back down to 1700, 1765, 1600, 1500, or worse. But the point is, if you buy natural gas and hold it, it may take a while, but eventually you'll get back above 3. You'll probably get above 4 at some point. So it is at the price levels it's at. You can see it is sell granny. It is borrow someone else's granny and sell them, and buy natural gas. It is that time. And you can see the channel low would actually be, oof, yeah, 1330s, 1340s, something like that. Then you'd be kidnapping other people's grannies to flog them. You wouldn't be borrowing them, you'd be stealing grannies so you could sell them for additional collateral, for additional money to buy natural gas. That's my take on that. And you'll see it more clearly in the 4 hour. We go down. 1, 2, 3, 4. Now we're starting 5th wave down. Fuck me, that's a lot of fibs. Like, that's just confusing, isn't it? There we go, that's better. So, yeah, probably more downside on natural gas. Stocks. Look ready for recovery. I mean, they look ready. They look ready to bounce. I mean, I called this head and shoulders here. Head, left shoulder, right shoulder. You know, break down. But we've had a good old retracement. The rally from April. We've retraced. Yep, look at that, 61.8%. And it's this diagonal line of angle that fits in all these places on the price action here. And we've got a positive divergence potentially building on the momentum of price, volume and trend. And RSI has reset all the way back down into the green zone, the bull reversal zone. So we could potentially see a bull reversal. I mean, it's that simple. We could see a reversal at these levels. Oops. Yeah. And if we look at the S&P, we see that more clearly. Now, I'm still short. I thought the high close above this pivot, 54.48, I thought that was potentially a nice juicy short, so I went heavy there. Well, not super heavy, but tight and heavy, within a very, very tight window. In terms of my stop loss, near the close on Friday. But I think if we can maintain over that price level, then really it's a long. So you can see we've got the positive momentum divergence. Look at all these measures of breadth, cumulative NIAD. It's bounced off the 14. It's it's already higher than this high here, but not corresponding in price. So if this is going to lead, it's going to lead up. Big recovery in NAHL. Big recovery in RINIA. This has been the percentage of stocks over the 50-day moving average has been sort of declining and resetting since. Well, it peaked in December of 2023. It peaked in December of last year. It's been declining and making low highs and resetting since then. And now it's bouncing. You see that's the 60 level. It's a pivot. It's a pivot and support level. So stocks could be on the up and up again. They could recover. They could recover quite nicely. I've been shorting silver. Again in demo. It's over 28.28 or 20. Was that 28.26? Yeah, 28.20. Whatever. 28.28. Let's say. That could count as a recovery to the long side. This is the weekly. So all I've been doing is going onto the weekly price chart. For this successful trading I've been doing is going onto the weekly price chart, putting in some levels, putting in some pivots, going down to the daily, putting in some levels, putting in some pivots, and then trading off the hourly based on those levels and how price reacts around those levels, and going heavier on the direction that I'm biased to, which in this case was short, than I was trying to go long, And you can see, this is another level here. Because it's this high here, it's these candle bodies here. The question is, what now for silver? Is it going to come all the way back down to 22.50? It'd be lovely if it did. If it goes down to 22.50, then we will get, I think, a curving low that will eventually take us up to, higher levels, but this all takes time. Remember, this is a weekly chart, so we come down. Maybe we get to 25. Maybe we really have trouble, we come down. It could be even summer next year. We could get down to 22.50, 22.60, 22.70, and then there'd be the long process of grinding up. It could be $40 by spring of 2027, something like that. This is all the stuff, I'm making this up as I go along. But it could be something like that. Go down to the daily. You can see we're at some sort of support. Again, I would say 28.28 is an important level. No divergence is showing, at least here. We've come into this sort of doji area, not quite the exact middle of the doji. We're at support. We are at a support of a kind. On the daily RSI, we hit an extreme high here. But the fact that we've come down to the far end of what would normally qualify as the bull reversal zone. Here, look, there's a nice little ledge there on the daily for potentially selling off. So it's not looking great for silver. If I was long, I'd be long with the stop here. I like 27.71. Just on the off chance that this is, you know, breakout back test, breaking out. You know, we've gone over and under this level here, this sort of mid level at 27.75. Now we're above it. So I was going to go long. That's what I would do. Let's put some over and under lines on this level to indicate that's an important level of bias. Sort of. Overall, and what I'm saying is if we're under this level and under this level, we're short biased. And that's basically it. And, you know, crude, again, big short crude, fantastic move from $78 down to 76. Plunging back into this wick got bought up the previous day. Actually, it tried to hold for 1, 2, 3 days, then it does these 3 days of attempted buying, crushed. That would indicate to me we're going lower. Step 1 would be $73, step 2 would be $67, $68. It doesn't bear thinking about. If we're going to come down to channel lows, that would be like back down to $48. There's a horizontal support dollar at like 55. Yeah, that's rough. That's rough. This is sort of like a bit of a back test of an internal support. So it's 76, which is also this horizontal level. But I mean, if it's not going to hold that, issue is I've made my daily segments the same width as my weeklies. Well, I've got that's a monthly. We're done with you. Can probably delete you. Just clean the charts up a little bit. Yeah, I'll delete you. Delete you. Actually, it's just confusing. So let's thicken you back up again. Either it's a line or it's not. I mean, the key thing is not to have too many on, I suppose. Look at me thinking this was this positive divergence here. Up, down, up, down, up, down. Into the body of this dragonfly doji. And then you got a 72 to 83, I guess a 1,100 point move. In a month! From the start of June to start of July. Amazing stuff. Yeah, so I think down. I think down for oil. So I'd be short oil, I'd be long stocks. I'd be playing silver various ways, natural gas. Again, like, if you've been shorting since these highs here, here's your head and shoulders breakdown. Here we go below the 50, we're below the 14s. You know, we're rolling over. You've had your move from basically 29.30 down to 20. That's a 30% discount. You know, if you were shorting like from up here to down here, that's a 28% discount. And it could go to 1300, but the issue is, it's like, I feel like most of the juice has been got from the squeeze on natural gas. And this is kind of support zone here. This whole 20, 21 area is a support zone in its own right. But you'd have to keep your eye on the lower time frames for that, I suppose. Yeah, so that's that.